Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Dollar against the yen. Dollar's had a tremendous rally since early December against, I'm sorry, that's the Swiss franc. Sorry about that. I said it's the yen. It's actually a Swiss franc. Sorry, that is an error. But there's the weekly chart in the dollar yen. A massive decline in the weekly chart of the yen. And here's the Swiss franc. Swiss franc. The dollar is trying to stabilize against the franc. I mean, it's very interesting. And if you believe that will continue, calls are available. If you think that the dollar might break, puts are available. Which strike price is going to depend on your view of magnitude. How far will the dollar rally or sell off against the Swiss franc? So to summarize, in-the-money options cost the most in nominal terms and have the highest deltas. In-the-money options require only modest moves to break even with more capital at risk. Very important point. So let me just repeat that. In-the-money options require only modest moves to break even with more capital at risk. At-the-money options cost less than in-the-money options with more moderate deltas and nominal dollar risk. So at-the-money options are going to cost less than in-the-money, but they have more moderate deltas, and they have nominal, they have nominal, more moderate nominal dollar risk. That's correct. At-the-money options require a larger move to break even relative to in-the-money options. Out-of-the-money options are the cheapest in nominal terms, but they have the lowest deltas with the lowest dollar risk. So you could understand the relationship between the delta and the cost. That's how you would make the decision of which strike price to trade. So they have the lowest probability of expiring the money. The out-of-the-money options, I should say, normally require the largest move to break even with the smallest cash outlay. When trading options, investors must always consider, always, is the risk worth the reward? The option Greeks, and again, please come back to our Back to Basics webinar, February 11th. I'll be talking about February 11th is the options pricing. Option Greeks, February 18th. Option Greeks are going to quantify various risks of being long or short an option. The option pricing model, and I'm going to be talking about the pricing model on February 11th, it only assists investors, traders in making their decisions. It's not going to give you, it's not a foolproof way of knowing which strike price to trade. It doesn't give you the right answer. It hopefully will assess risks in various ways. Option forecasts require not only direction but timing and magnitude. The forecast of how far the asset will move using reasonable expectations can help investors select the appropriate strike price to trade. As I mentioned early in the presentation, we just launched a new website, fxoptions.com. So please go and check it out. You can see the per US, the in US, the symbols. We have a virtual trading contest. You can sign up for the virtual trading contest, read the rules, make sure that you're eligible. We have lots of trading tools. We have a pricing calculator. As I said, we have virtual trading. We have news and commentary. Trader forum, I try to answer all the questions. There's an Ask Steve part of that site, so you can go in and ask me any questions if you'd like. I try to answer it at least every day or every couple of days if I can. We have the events calendar where we have all the webinars and the live events where we at the IC are traveling throughout North America, sometimes throughout the world, talking about options, benefits of options, and of course, understanding of what are some of the disadvantages of being long an option or being short an option. You need to understand the benefits as well as the drawbacks. So please bookmark fxoptions.com And at this point, I want to turn it back to you, the attendees, to ask me any questions you might have. I'm going to give everyone a couple moments. I know I went through a lot of material here. And you can go back to the archive. I do apologize. I had one or two glitches on those slides, so I'll have to go and fix those myself. But I hope that you found this very informative. And now is the time. I'm going to give everyone some time to answer any questions. Please fill out the survey at the end. I hope you found this to be useful, and hopefully you'll build on this in future Back to Basics webinars, whether it's the Greeks class, the option pricing class. The next class is going to be how do option orders affect FX options prices. And that's a bit about volatility, and then I'll follow up on volatility. Let's see. Question about strike prices. Is it that simple that I could just select an in, at, or out of the money optional, as you were saying, Steve, picking 1, 2, or 3? You know, it's about getting comfortable with the product. So once you understand that you might want to start looking for your options, the at-the-money option might be your first stop. You want more leverage? You might move to an out-of-the-money or a far out-of-the-money. If you want less leverage, but you want it to be moving much more like the underlier, the exchange rate itself, well, there you go. You can buy the in-the-money options. Question about the archives. There's actually a couple ways to get the archives. You can go to www.ise.com/archives, or you can go to the FX options site, Harold, and you can go to the events, and you'll see that the last couple events are there, and you'll be able to listen to the presentation again. So thanks for the great question. Another question here about spreading. If you're confused on which strike prices to trade, can't you spread one versus another? That's a great question, and I'm going to go through that at a future webinar. I think that's going to occur in late March, early April, where I talk about spreading. Trading, let's say, if I'm looking at the U.S. dollar Canadian and we're trading at 105, I might want to buy the 105 and sell the 108. I could actually call spread, or I could do the 105, 102 put spread. So that is another presentation that's yet to come. You're not going to be able to download, Harold. You're going to be able to watch them via archive. But I don't have a problem. If you'd like the presentation, I could send you one. Just send me an email at smeizinger@ise.com. I'll send you the presentation. So either way. So I'll type in my email, smeizinger@ise.com, and I'll try to get back to anybody who wants the presentation. I'm going to give everybody another 30 seconds to try. You got to have some question on which strike price.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.